Hello, everyone, and welcome back to the J22 report. I am your host, Johnnie Market. Y'all know that drill. Smash that like button, subscribe if you haven't. Just a little disclaimer, nothing should be construed as financial investment advice. These are just my opinions, thoughts on the market. And let's get into today's stuff. And I was just going around seeing the markets. I'm not like stock market's going down, but it's not really going down all that much. Gold had a big day today. Let's look at. I'm actually just gonna go look at the GLD here, and you can tell it's had a really. I mean, look at that, up 3.09. So it's a big thing. 1%. Good. Healthy market up on a 5-day basis. Now on a month, it's in correction mode. 6 months. Look at the year to date, 27% return. So gold, still in a bull market. Like it's sideways to consolidating, and it's doing well. I do think the last wave is going to be one where the insanity one, the one that all of us gold bugs have been waiting for since basically 2009. So you can be happy about that. Sorry about I just skipped and going on my mind. I was just doing a couple of things. We'll start getting into some of the stuff today. So we'll get rid of the gold. And then first thing we'll talk about, there's Fed minutes. This is published. The Fed, they're worried about the tariffs, the inflation, and the labor market, as the minutes show. And if you actually look at that, I'm just going to stop sharing for real quick. If you actually look at that, uh, they should be worried about the inflation and they should be worried about the labor market because the labor market's really bad. And I mean, I don't know about you, but I see people all over, whether it's LinkedIn, whether it's in real life, all they talk about is how it's almost impossible to find a job nowadays. I mean, impossible. Even if you wanted to get one of those part-time jobs while you're still unemployed. And I was listening to someone, and I 100% agree with this. They were talking about how the unemployment rate is not even accurate just because if you go file for a claim, I just know this from my wife's experience for unemployment. They pay you next to nothing. You can't live on any of that. So a lot of people would rather just say, hey, I'm just going to go drive Uber. Or I'm going to go, I'd rather work at a bar. I would rather, get a bartender. That's what I did. Well, I didn't do this. So I wasn't unemployed, but that's what I was prepared to do. I was going to go find a fast food or joint job. Luckily, when I got laid off, I found a job within a month, but I was going to start I was going to basically made it my job. I took my work hours and I did that. And then once I took my work hours to do a job, I was going to apply for two or three just because, you're paid next to nothing. Uh, you can't live off it. So just seasonal jobs, where it's fast food, bartending, something. So I do agree. I think a lot of these numbers just I don't even think that it's prop. But the other thing I was talking about is I wanted to do. We'll just use soda here. Beverages averages 55%. I was talking about how companies, now's the time you have to lower your margins if you want to get anyone in the business. I know costs are going up. One way you got to compensate, and I'm basing off my experience when I worked in the precious metals industry. I worked there from the 2012 through 2015, so that's one of the worst bear markets in any market, probably in my I would say in my lifetime, because the precious metals market from 82 to 90 was the worst bear market. Probably that was an 18-year, 20-year bear market out of any maybe Japan stock market is pretty bad, but I won't even consider it because precious metals went from like 860 to 200 something, and it was over a course of 18 years. So you really, it was a slow bleed out. So anyway, going back. So if anyone's been in a bear market and worked, it's me. And so to get even people to buy, we had to lower our margins. And this is what they're entering a 17-year bear market, and people have very limited incomes. So let's say beverage, you make 55 cents per dollar. Well, you're going to have to start making 30 cents per dollar if you want to survive. You're going to have to lower margins. That way you can lower prices and get people into the door. And I see that too. I see a lot of restaurants, the ones that are failing right now, they don't have happy hour. It's not there every day. I remember this one place near me. Always, always people in it, very rarely. And I looked at their website. I want to go one time. I haven't been able to go yet, but happy hour, 4 to 7 every day. I went to this one bar. Also, it's an Irish pub. Always has people in it. Why? They have happy hour 4 to 9 every day. Doesn't matter. And it's when people are at work and when they want to go to work. And they're not having any money troubles despite all this. Gotta lower your margins. Have to do it. So, uh, yeah, I'm just telling you, if you own a business, you own the margin thing. So, anyway, going back to retail, today, this is a 5 day of the S&P. I heard a lot of things about the S&P 500, or not the S&P, the retail earnings, Home Depot, Target. Targets were really bad. But I've heard mixed things, so I decided just to go look at the market to see how it reacted. Now, I mean, causation doesn't mean correlation, but I'm assuming because I heard mixed things. Obviously, the retail earnings weren't good. You can argue all you want, but this is the 18th is today's a Wednesday, 18th a Monday. So let's see. Yeah, so if you look at 18th, it was 6443, and now it's 639. You can see right here the buy the dip. But so obviously the retailers, they're not doing well. Of course, in the Home Depot earnings, I did hear one thing where they said we have to look at to see where we can raise prices without losing customers. Home Depot gotta lower the margins. You can't be raising prices. In bear markets, that's what you do. So yeah, I understand. I'm basing it off real world experience. So if you're like, have you ever run a business or anything? Yeah, I told you I had a business during one of the worst. I didn't have it. I was working as a sales rep and I was doing it in one of the worst bear markets. Definitely the worst bear market since the 2000s in any market. Maybe the Japan stock market, but that's it. So I've actually been on the forefront in a bear market. And during that time, people can't afford higher prices and they can't afford the prices they were paying during the boom times. And costs aren't coming down. So now is the time to lower margins so you can keep people in there because it's either sell at instead of making 55 cents, those are no longer your options. It's either make 30, 35 cents per dollar on the soda, or you don't make anything. Just empty shelf and you get rid of it. So anyway, US companies eating most of the tariffs for now. Not only should they eat it, but they should continue to eat it. So there it is. As of 64% of the tariff costs were borne by U.S. businesses. There are some that probably don't have to. So per Goldman Sachs. And then other thing, look at McDonald's to slash combo meal prices to win back budget conscious consumers. So this is why McDonald's has been around for a while, and this is why McDonald's is doing well. They listen to this channel. They're lowering their margins to get people in. So, of course. stupid video. So as you can see, that's what I'm saying. I do think in terms of the Fed, big whole thing, I think they're going to start cutting rates. I don't know if there'll be a September rate cut, but the economy's getting so bad. I don't see how they can. And with all the revisions, I don't know if the revisions, I could see a job report doing well just because they might be afraid of getting fired. Or they might have a bad job report but revise the other ones again. But we'll see what happens. But anyway, that's all I have. In terms of the markets, this is probably the last year of anything. Oh, yeah, the other thing, Warren Buffett bought housing stocks. We'll see how that goes. So, anyway, hit that like button, subscribe, and remember, nothing should be construed as financial investment advice. My opinions and thoughts only. And I'll see you next video.